Welcome back, everyone. Let's introduce our next presenter. We have UR Energy. It trades on the New York Stock Exchange American under the symbol URG and on the TSX under the symbol URE, and is a uranium mining company operating the Lost Creek in-situ recovery uranium facility in south central Wyoming, which produced, packaged, and shipped approximately 2.6 million pounds U3O8 from Lost Creek since the commencement of operations. We're happy to introduce the CEO, John Cash, today. John, welcome. How you doing?
Doing great. Thanks, Anna. Really appreciate being be able to come back to Emerging Growth and present our company again.
Good. We look forward to hearing your presentation and some updates. Take it away.
All right. Well, thank you. We always like to start the presentation by showing a slide of our processing plant. It's fully constructed, fully permitted, and as Anna said, has been in production for some time. We've produced about 2.6, 2.7 million pounds of U3O8 since we initiated production. And the photograph on the right is a picture of our first shipment that went out some number of years ago to the conversion facility. So we're excited about the project. We continue production through today. And we're looking forward to a great future as the uranium price is beginning to come around. We are required to show the disclaimer, and I would encourage everyone to review the disclaimer very carefully. We put a lot of effort into this, and there are risks involved with mining, as with any business venture. So please be aware of this, and I will likely make some forward-looking statements throughout the presentation. Do be aware of that as well. So the company in a nutshell, if I can do a summary slide to begin with, we have been in production for quite some time, producing 2.7 million pounds of U3O8. And we did resume a drilling program back in the fall of 2021, and that continues on through today. Our objective is to be able to put enough wells in and do enough construction so that when market conditions allow and contracting allows, that we can ramp back up into full production very quickly. And right now, if we pull that trigger, as we get contracts in place, we believe we can be back up to full production within about 6 months is our target. We've got a great resource in the ground at Lost Creek, 11.9 million pounds of measured and indicated resource, and an additional 6.6 million pounds of inferred resource that we're pursuing at this time. We've got a great reputation of being a low-cost producer here in the U.S. and globally. When we ramp back up to full production, we believe we can get down to around $16.34 a pound. That's consistent with our previous cost of production when we were ramped up. We do have all the permits in place at Lost Creek, so there's nothing hindering us from production there. We are also looking at expanding into the surrounding area where we have tremendous additional resources, and that permitting is going well, and we expect to get that permit late this year, perhaps early next year. But we're well on target there. Beyond Lost Creek, which is really our flagship property, we have a second property that we have all major permits in place for that. It's called Shirley Basin. It's also an in-situ recovery facility where we intend to recover uranium. And that project will effectively double the licensed capacity that we have. Lost Creek is licensed at 1.2 million pounds per year from the mine. Shirley Basin is licensed at 1 million pounds per year from the mine. So that takes us combined to 2.2 million pounds per year capacity. Shirley Basin is what we believe the first in-situ mine in the world. It started back in 1963, 1964 with a pilot project. But despite it being a pilot project, they had significant production using the in-situ technology, and likely the first in-situ mine in the world. And we're excited to return in-situ back to its birthplace. Throughout the life of our company, we've demonstrated a lot of flexibility, a lot of creativity with our mining and with our marketing of materials. And that's been evidenced by our contracting portfolio. We've also got a lot of material that we have drummed and in storage that is ready to sell either onto the spot market or into a strengthening long-term price. Not too long ago, the Department of Energy, the NNSA, who is responsible for the weapons program, they were told by Congress that you need to establish a uranium reserve. And so that has been done. and they've gone out for a proposal, and we've submitted a response to that. And we were expecting to hear back from them in September. DOE has extended that a bit into October, but we hope to hear back from them in October, and we are hoping to sell some of that inventory to the U.S. government. That material won't be used for the weapons program, but it will be used as a backstop for U.S. utilities because of their reliance on Russia and Kazakh pounds. We are really beginning to recognize that we can't continue to rely on those resources and that we need to bolster domestic production. So when the government makes those purchases, it will go into a bank and be held there until U.S. utilities need that. So we're looking forward to a response on that from DOE. This is a relatively new slide that we've inserted into our corporate presentation. And I put it in here because I say in situ mining, and a lot of people are not familiar with what in situ mining is. So a picture is worth 1,000 words. And this is a photograph of our in situ mine at Lost Creek. This is the active mine right here. We don't have an open pit or tailings, and our disturbance is minimal. So what you see in the foreground are those little drums, or look like little beehives. Those are wellheads. And what we do is we inject water, it's groundwater, fortified with CO2 and oxygen, and that dissolves the uranium in the ground, and then we pump it up through the next adjacent well. So you can see our footprint is minimal. And when we're done, we'll remove the wellheads and finish reclamation, and within a few years, you won't even be able to tell that we were there, and it'll be free release or unrestricted release. It can be used for anything at all. So moving away from our projects just for a bit and talking a little about the broader space, the nuclear thesis, if you will. The demand for nuclear fuel is growing, and it's been growing fairly rapidly because of its green attributes. Nuclear power is carbon free. The US already gets about 20% of its electricity from nuclear, and worldwide it's about 10%. Right now, according to the World Nuclear Association, there are about 436 reactors in operation, with an additional 60 being built. And I'll focus on those numbers just a little bit more in the next slides. But the World Nuclear Association is projecting global growth of 4.2% annually through 2040 in their reference case or their base case, and 7.9% annual growth in their upper case. And those numbers are tending to grow with time as more and more countries are announcing the development of nuclear power. But it's not just for electric generation. Right now, nuclear power companies, and especially here in the US, are looking at hydrogen production from nuclear power because it's green hydrogen that can be used to fuel a number of industrial processes. Also, a number of industries are looking to turn to nuclear power for green energy to fuel their industries. Crypto miners are under a lot of pressure right now to move to green energy instead of fossil fuels. And of course, the EV market. What's the point of having an electric car if you're charging it with a coal-fired power plant? So there's pressure there to move to nuclear and other green sources of energy. One final new industry related to nuclear I'd like to comment on is the SMRs, which stands for small modular reactors. And they are being developed right now in a number of countries, including within the US, and they're already operating in 3 countries. The NEI, which is the Nuclear Energy Institute, recently did a survey of US utilities and came away with the result of that they expect about 300 small modular reactors in the US by the year 2050. That will introduce significant additional demand to the fuel supply. So a little more color here on the countries that are building out their nuclear power fleets. China certainly is in the lead. Their goal is to construct 150 new reactors in the next 15 years. They've recently announced that they are on target to do that, and they may actually expedite that program. England also is doubling down, according to their prime minister, and they've got a goal of 2035 to be carbon free. South Korea has a new pro-nuclear president. He's proposing expansion of nuclear power as opposed to the phase out that they were in historically. France is advocating extensions of life for a number of their reactors, plus building 6 to 14 new reactors. Germany perhaps is the most exciting here. Not that they have that many reactors, but they have been the most anti-nuclear in the past. And just literally about 2-3 weeks ago, they announced that they're going to keep 2 of their reactors available and online through this winter because they don't believe they have alternate sources of power to keep electric flowing in Germany. So that is a fantastic reversal. Japan also has announced that they plan to expedite the restart of 7 additional reactors and potentially build out more reactors. That's a short list. There are a lot of other countries around the world that are building out, including some of those at the bottom. And even here in the US, we're seeing growing support for nuclear. Southern Company is in the process of building 2 reactors right now in the southeast part of the country. One of those is slated to come online late this year. The second one will come online next year. And those are major, big, 1,000 megawatt plus reactors that are going to be immense sources of carbon-free electric. Looking at legislation, I spoke earlier about the U.S. Uranium Reserve. They've allocated $75 million to purchase and process uranium from domestic sources. And that's why we've applied to sell some of our inventory to the U.S. government. And we are expecting awards to come sometime late this month, most likely. And hopefully there are no additional delays from DOE on that. But there's also a civil nuclear credit program that's been passed by Congress. It allocates $6 billion to extend the life of reactors in the U.S., our 93 reactors. And then very importantly, the Inflation Reduction Act that was recently passed, it has significant measures to support nuclear power in the U.S., including hydrogen generation, tax credits for existing production, and also tax credits for new production. It's probably the most significant legislation in the history of the nuclear industry. Beyond the legislation that's been passed, if we look at pending legislation, the Russia issue is a major issue for us here in the U.S. because they are a major supplier of nuclear fuel. And Congress, in a bipartisan manner, is looking at ways to reduce our reliance on Russia. So there are a number of pieces of legislation that have been proposed by Democrats and Republicans to slowly wean ourselves off of that supply from Russia. So we'll take a look at some of the other activities that are going on in the market. One of the big things that's been happening the last couple of years, the financial investment in the industry has been growing dramatically. Financial players have recognized the green energy attributes of nuclear, and they're moving into the space very quickly. Big hedge funds like MMCap and Anchorage and others are jumping in. ETFs are being formed. Even some of the big mining companies are buying significant quantities of uranium. But probably the biggest game changer that's out there is the Sprott Physical Uranium Trust that was formed on July 18th of last year. And the way it's designed is they have an ATM mechanism where they sell shares into the market and they take the capital that they raise and they buy physical pounds of uranium and they put them in a trust. It's in kind of an irreversible trust. So pounds can be put into the trust, but they cannot be sold out of the trust. So since the formation of the Sprott Physical Uranium Trust and the pounds they acquired with their initial acquisition, and since then, they have 58.5 million pounds of U3O8 in inventory. To put that into context, globally, we use about 180 million pounds per year. So they're putting a lot of pressure on the market. After Sprott formed their uranium trust, Kazakhstan jumped in. They also formed a physical uranium trust and are funding that and purchasing physical pounds as well. But one more slide here on kind of the general market and the nuclear thesis and where things are at. We have to talk about geopolitics because it's really the tail that wags the dog. Russia, when they attacked Ukraine, that really put the long-term supply of uranium and processed uranium in jeopardy. That's important to the market because Russia supplies a big chunk of U.S. demand, and globally they supply about 43% of enrichment and 38% of conversion capacity. Now, I won't get into all the technical details on that, but after we mine uranium, the next step is conversion, processing step is conversion, and then after that is enrichment. So those two steps have to take place before nuclear fuel can be utilized in a power plant. So Russia really dominates the global market. Kazakhstan, which is, of course, a member of the former Soviet state and a close ally with Russia, they supply 46% of the mined material. And Russia has a lot of influence over those mines. They actually have ownership in 4 of the 11, and they also have a lot of geopolitical influence over the pounds coming out of Kazakhstan. The pounds coming out of Kazakhstan right now are shipped through Russia to St. Petersburg and then shipped through the Baltic Sea. That route is very tenuous because of sanctions issues and also because of insurance. Insurance companies are not wanting to cover anything coming out of Russia. So it's becoming very difficult to ship through Russia. So Kazakhstan, they have a couple of alternate routes. Neither of them are very good. One is through China. It's a very long route. The other is through the Black Sea, through Georgia, through Turkey, through a route through there that they are attempting to develop. But it's very difficult. And right now, Armenia and Azerbaijan, with the issues that they have, it's not a peaceful route either. Some of the other primary production around the world is owned by China, especially in Africa. China has gone in and bought up a lot of the big mines there. And so the question comes up then, if Russia, Kazakhstan, and China are so dominant, where are our other allies? Canada is one of the big producers in the world. They had their big mines shut down for quite some time. They are now attempting to bring those back online. But quite frankly, it's not enough to displace or replace any disruptions coming from Kazakhstan and Russia. So if we take a look at the U.S., the chart here is produced by the EIA, the Energy Information Administration. And you can see that uranium production in the U.S. has declined to a level that you can't even read it on the chart. It's irrelevant. And that's important because while we are the largest consumer of nuclear fuel in the world, we produce virtually nothing from the mining perspective, from the conversion perspective, and we do have some enrichment, but it's foreign owned here in the U.S. But that's where URE Energy, our story, comes into play. Because we are a producer. We've produced recently at a very economic level, and we are looking to ramp back up Lost Creek so we can feed into that supply gap. A great resource in the ground. We've got a great history of production. And I should comment that the recovery rates at Lost Creek are setting the standard for the industry. We've got about 90% recovery in our first mine unit, as well as our second mine unit on average. That's fantastic because it really drives down our cost of production. Typically in the in-situ industry, you get 70 to 80% recovery. So we're beating our competitors in that regard. If you take a look at the map on the left-hand side in the panel, the permitted area right now is Lost Creek. It's in blue. But we also have the mineral claims on all of the green areas surrounding, about 35,000 acres, where we have known resources. And we are working on expanding into the LC East area, or Lost Creek East. And we expect to have those permits late this year, early next year. Every time we've gone out and done an exploration project and we've looked for more resources, we've been successful. And we've been able to find resources at about 50 cents a pound. We are a very low-cost producer, and I will draw your attention to the year 2015. If you take a look toward the bottom, our average cash cost was about $16.27 a pound. And we believe we can't get quite there when we ramp up, but we believe we can get very close to there based on our economic analysis. So that puts us in the lowest quartile of cost globally. But we are a value play. And that's why I like to show this chart. We are a producer. We are not a wannabe. We are producing today at a very low level. These are real pounds in the ground with very low production cost. Shirley Basin, just a little bit more light on that one. 8.8 million pounds of resources in the ground. We made the acquisition on this project in 2013 because the resources are very high quality, good grades, very shallow. It's completely drilled out. So we don't have to go and do any exploration or delineation drilling. We have all of the historic data. we can move in very quickly onto that project and begin production. Our estimate on the cost of production there, because the deposit is so shallow, we believe we can produce at about $15.95 cash cost, the C1 cash cost. So we're excited about that project. The land is mostly private with a little bit of federal. That means our holding costs are very low. So we are continuing to drill and construct our next header house 2-4. And that's been ongoing for a while, and we're making good progress on that. We're also doing delineation drilling on the next 5 header houses so that we're ready to ramp up. We've got an advanced purchasing program in place. We do recognize that some materials are in short supply and there are long lead times. We've been aware of that for a long time. And so we've got that program in place, and we believe we're in a great situation where we can ramp up very quickly. We've kept our key staff, our most senior people, and so we will need to do some additional hiring, but we've got the trainers on hand, and so we're in a great position. With regard to the green revolution, we believe we're leading the way. If you take a look at the resources in the ground at both our Lost Creek and Shirley Basin project, and you compare the energy they will generate compared to a coal-fired power plant, it's equivalent to taking 312 million metric tons of CO2 out of the atmosphere, which is the same as taking 67.5 million cars off the road for a year. And we're proud of that. We're also taking other steps to reduce our footprint. We're building an office or a shop right now. If I look out my window to the left, I can see the guys out working, building a shop here in town to try to move those operations into town as much as we possibly can, to drive down cost of transportation, remove CO2 from the atmosphere because we're not driving, and also to improve safety by keeping our guys off the road as much as possible. We use the in-situ technique, which has minimal surface impacts, low energy as well, and all of those impacts are temporary. We also recycle a tremendous amount of our water. Right now, about 99.3%. We are taking steps to improve that, and our goal is to ultimately recycle about 99.8% of the water that we utilize. We are a leader in our industry here in the US and globally. We have unique designs for our tankage and the processing plant. We've developed unique ways to treat water and dispose of water that's environmentally friendly. We've also developed well abandonment techniques and also regulatory techniques with regard to aquifer exemptions that we get through the EPA. We have ongoing research and development, specifically with regard to well casing techniques and materials. We are doing testing in the field right now on that, and we hope to have something to report on that before the end of the year. And as I alluded to in the previous slide, we are working on some advanced water treatment filtration that will improve our ability to recycle water. So just starting to close out here, just a few notes on the market position. We have 219 million shares outstanding, fully diluted, 242 million. We've got a very good, strong cash position. We had $42.2 million in the bank during the last report in August. We have a market cap that fluctuates quite a bit. I mean, everybody on the call is familiar with how volatile the market's been, but we're running anywhere $240, $260 million on market cap. We've got a great inventory that we can convert into cash very quickly. It's worth roughly $16 million. So if you add that to our current cash, that puts us in a great place. Sufficient cash for us to be able to ramp up Lost Creek and get it up running, and also likely sufficient cash to get Shirley Basin up and running as well. Our share price is running a little over $1. We have great liquidity. We've been running about 2.2 million shares per day in the market. We are listed on the Russell, and we have great analyst coverage. So in closing, just a few takeaways. We have solid runway on a great project, great cash, great inventory in place to fund our activities for the foreseeable future. We're looking to ramp up our low-cost production to 2 million pounds per year as we bring on more contracts. We do have one contract that we recently signed with a major U.S. utility, and that contracting would start next year. We do have a call on that contract where we are attempting to round out our production book. And we're working very hard right now with U.S. utilities and European utilities to be able to round that out. We will not start production until we round out our contract book. We're a conservatively run company. We won't sell into the spot market or take that risk. We really prefer to sell into long-term, stable contracts, and that's what we're working toward right now. But we're in a great position to ramp up very quickly at very low cost with very little dilution to our shareholders. And I think that's unique in the industry. I don't know that anyone else can really say that. There are a number of catalysts out there that we encourage people to keep an eye on, especially the geopolitics. A lot happening right now globally that affects the nuclear industry. So with that, I'll leave you with the slide with our contact information. Don't hesitate to reach out if you have further questions. And Anna, with that, I'll go back over to you, and I'm glad to entertain any questions if we have some time left over.
Great, John. We do have some time, and we do have quite a few questions for you. Let's jump in. Dan Walsh asks, how do you consider uranium as an investment versus gold? Is it a hedge against inflation, or is the end game based on the amount of resources, stable production costs, and increasing prices?
Yeah, I wouldn't put it in the same category as precious metals. Different industry, different investing thesis. Really, I think the nuclear thesis, the green energy component, is really why people should be looking into buying shares in uranium mining companies. The world is turning nuclear. As several of our slides showed, countries around the world are moving very strongly in that direction. And that's really going to push the demand upward for nuclear fuel. And there's a very limited number of companies in the world. We're probably one of 14 companies globally that can produce into that market. Of those 14 companies, several of them are owned by governments, so you don't have an opportunity to invest. We're on a very short list of publicly traded companies that you can invest in. So if you like the green energy thesis, nuclear is certainly going to be a part of that. And we believe as a low-cost producer, we're right on the forefront of that. We'll be selling pounds into that market.
Great. Bernie Weir says, what is your criteria for kicking off a drill program at Lost Creek to bring it back online? What is the seasonality?
Yeah, you bet. So we are working in the high plains of Wyoming. We're at 7,000 feet of elevation. Having said that, we're accustomed to working there, and we work year-round. So the weather rarely stops us. On occasion it does, but it rarely stops us. So when we kicked off the program in the fall of 21, we've been drilling essentially nonstop since that time. And so it's going great. And we're looking at actually expanding that drilling program going forward. We haven't made a decision on that. It's going to be market driven, and we'll see how it goes.
Yeah, I bet it gets cold over there.
It
Merle
does.
J wants to know, what's the timeline to production on Shirley Basin?
So yeah, I'll comment actually on both properties. Lost Creek, we believe we can have it ramped up to essentially full production within 6 months of a go decision. That's because it's already built out and ready to go. Shirley Basin will take longer. Although we have all the permits in hand, we still need to build out the front end of the processing plant. So to build it out and to ramp it up to full production, we're looking at about 18 months to be able to do that. So we could have both mine sites up to full production, 2 million pounds a year, 2.2 million pounds per year, within about 18 months.
Fantastic. Mike Kozak wants you to talk a little bit. You mentioned earlier that the DOE was supposed to award the $75 million of domestic uranium purchases by the end of September, and this is delayed into October.
Yeah.
Have they said when? Is it a week? Is it a month? How long of a delay?
Yeah, you bet. So yeah, initially the DOE requested validity on offers through the end of September. About 2 weeks ago, they came to us and said, hey, we're running behind. Can you extend the validity to the end of October? And we agreed to do that. The other companies that have supplied proposals, I don't know if they were agreeable to that or not, but we're agreeable to extend that to 1 month. Having said that, we do expect DOE to get back to us before the end of this month, which is not that far away.
We're in October. We're in full swing. All right. Adrian Cantwell asks, what's your preferred pricing structure for long-term contracts?
Yeah, great question. Our preference, we're conservatively run. Our preference is to have a base escalated price. So we start off with a set price that we agree with, and then it's escalated by inflation going forward. That's our preference. Having said that, you're only limited by your imagination when it comes to the form of the contract. There are many hybrids out there that are market related. Some have inflation provisions, some don't. But given our conservative nature, we want good, profitable contracts that start with a good base, but that escalate through time to cover inflation. So that's our strong preference going forward.
Tom Neal wants to know, who are your main customers and who are your potential customers?
Yeah, absolutely. So in the past, we have contracted exclusively with major U.S. utilities. We intend to continue that theme and contract with major U.S. utilities. But having said that, if utilities from Asia and especially from Europe are interested in purchasing material, and we have had conversations, especially with European utilities, then certainly we are willing and able to supply them uranium as well. But our preference is the U.S. We have a lot of customers here in the U.S., so really there's not a lot of need for us to go overseas.
Good. Larry Hill wants to know, are there any awards from the government on a percentage basis, and how will that affect you? Will it assist your burn?
So right now, there are no government awards that I'm aware of, other than they are purchasing material to fill the uranium reserve. But as far as other grants, other things like that in our space, I'm not aware of any. Certainly there are in the critical minerals space, but uranium officially is not a critical mineral, so we don't qualify for those. But we do qualify for the uranium reserve.
Terry Kay wants to know, what has to happen in terms of milestones to start to get some major contracts with more utilities? Is it just production capability issue at this point?
So really the only thing we're waiting on to pull the trigger to go into production is contracting. And as I said, we've got one contract, a great contract in place. The quantity is not sufficient for us to pull the trigger. So we're trying to round out that book with a couple of more contracts. We are in routine and regular conversations with our customers, and they are recognizing more and more that they can't be so reliant on Kazakh and Russian pounds. And so there's a stronger and growing desire to contract domestically and with Western world suppliers. So we're very optimistic, and this is a forward-looking statement, but we're very optimistic that in the coming months, we'll be able to round out our contract book. Once we do that, that'll be our trigger to go into production at Lost Creek. If we continue to contract out, that'll be our trigger to start up Shirley Basin.
Great. Rod Foster asks, do you see production costs remaining constant and prices rising consistently?
So we've recently done a tech report where we did an economic analysis. We have built in some of the inflation that we're seeing, especially with personnel and contractors. And so, yeah, we expect to see cost to go up, but that's not going to affect just us. That's going to affect everybody, especially when it comes to contractors and personnel. Once inflation is built in there, it doesn't go away. It's baked into the cake. However, some of the inflation that we experience is related to oil and gas prices. Those are fluctuating, and some of that, the prices will go up, but we expect them to come back down. So it's a mixed bag. Fortunately, Lost Creek is built out, so we have minimal exposure there to capital inflation because it's built out. But we do have that exposure at Shirley Basin where we do need to build out. So yeah, it's a bit of a mixed bag, something we're well aware of, and it will affect prices going forward.
Tom W. asks, when you make an acquisition, what's your ideal structure? Is it cash, stock, royalties? And are you more exploration minded or acquisition minded?
I think more acquisition minded, if I can answer that in reverse order. But as far as the structure, it depends on the deal of what we're looking at. We are interested in growing the company larger. I've not been shy about saying that. But we do perceive ourselves, and I believe our shareholders perceive us as a value play. We're not going to go out and buy projects that are 20 years, 30 years, 40 years from production. If we go out and we make an acquisition, it will have to be with a company that looks like us, a value company with line of sight on production at reasonable cost. Nothing pie in the sky. That's not who we are.
Thank you for that. Jason Farrell says, you stated you're not selling into the current low spot. What is your floor price for you to consider some sales?
Yeah, so that's not a number we divulge for obvious reasons. But I can say that when we had contracts, 2013, 14, 15, through 2020, a lot of those contracts were around $50 a pound. A lot of them were signed up, around 2014, 15. So if you kind of want line of sight on what we need or what we want to ramp up production or to sell pounds, take those numbers, multiply them by inflation, and that's going to get you in the ballpark of where we want to be. Also, I would say the spot price earlier this year got up to $64, $65 a pound, and we decided not to pull the trigger and sell our inventory because we believe we can get a higher price through either DOE sales or with utility customers.
Dominic Pazzi says right now they have a contract with a U.S. utility. How many contracts do we need to have signed in the contract book to restart production at both mine locations? Yeah,
so right now the contract we have is for 200,000 pounds per year over a 6-year period. We would certainly like to get into the economies of scale. No exact number, but 600, 700, 800,000 pounds a year would be a good level. But it also depends on the pricing that we get with those contracts. Obviously, if it's a low price, we need more pounds to justify a ramp up. If we get a really high price, then it takes fewer pounds to justify the ramp up. But I showed you the chart on our historic production, 500 to 800,000 pounds a year in that range, and we were profitable in some of those quarters. That's really where we would like to get back to as a minimum.
Adrian Cantwell asks, do you intend to help consolidate companies in the industry, either as a takeover target or as an active buyer of other companies?
Well, again, I'm interested in growing the company larger. I think that's important. There are a few targets out there that we're interested in. We believe there are some quality, not just in the U.S., but internationally as well. But there's also a lot of junk out there. And I get approached probably at least once or twice a month with somebody trying to sell me the dregs of their company or things that we're just simply not interested in. We will only acquire quality projects. And our history shows that. We have been very careful not to acquire a lot of projects. We have a number of competitors that are out there making acquisition after acquisition after acquisition. A lot of those companies and projects they're acquiring are not going to see production in my lifetime. And we're not interested in that. We're only interested in projects and companies that have a good line of sight on production. And I can say with a straight face, hey, within 5-10 years, we can get this up and running and be profitable. And if it doesn't fit that criteria, frankly, we're not interested.
Good place to be at, John. This is a really exciting time to be in your industry, and we appreciate you joining us with these updates on our conference. Thank you so much. Please come back again in the near future.
All right. Thank you, Anna.
All right, everyone, stay with us. We're going to pop right back on with our next presenter. We'll be right back.